One of the most talked topics in real estate right now is the 50-year mortgage, 5 decades of mortgage payments.
They're extending it to 50 years. The reason why they do that is to help reduce the monthly payment. But in the long run, it does not do justice to that. Where you're going to struggle is you're not putting that much into equity. If you're at 6% on a 30-year, 6.75 on a 50-year, you're only $51 less than a 30-year. There's less of a down payment than 5 years from now when you're selling the house. You might not have enough equity to clear. Then you're having to bring money out of pocket just to sell that house. There's a lot of risk versus reward to do a 50-year mortgage, in my opinion.
Today in our podcast is one of the most talked topics in real estate right now is the 50-year mortgage, 5 decades of mortgage payments. Is it good, bad for the buyers right now? We're going to be interviewing Jatin Patel, lender himself, what he thinks and why this might be either good or bad for the buyers. Let's go ahead and get started. Okay, Jatin, thank you for coming on our podcast one more time.
Thank you for having me. I had a great time last time. So
yeah, we had a lot of success for the last podcast we did on just talking with you about, the mortgages and all of that stuff, first-time home buyers, which was great. But today we have a different topic to talk about. A whole new thing that people are talking about is a 50-year mortgage.
It's out there.
Blah, blah, blah. It's out there. And this is why I'm wanting to do a podcast for the viewers to kind of understand what is all this about. So I'm just going to go through the questions that we have here that the clients have told me that, please see what he thinks about this. So I'm just going to go and get started. Can you explain what a 50-year mortgage actually is, or what are they thinking, and how it differs from 30 to 15 years of the mortgage loan?
Yeah, so it's a 50-year mortgage. It is what it is. It's a 50-year mortgage, right? Just as the 15-year, you're taking 15 years to pay off your loan. 30 years, you're taking 30 years. 50 years, now they're extending it to 50 years to help. The reason why they do that is to help reduce the monthly payments, right? It's kind of drive a little bit more interest with buyers being able to manage that monthly payment to be a smaller amount because now is dragged out to 50 years instead of 30 years. So that's the thought process of it helping buyers now buy homes to keep that monthly payment lower.
What do you think overall about it? I know it's not a set thing, guys. This is not something that has happened. It's just in the talks.
Correct. So it is, there's not many banks. It's a one-off. You'd have to find a bank that mostly it's going to be a portfolio loan that they're willing to hold on to the loan. None of the big banks are doing it right now. And so this is just all talks of what if, right? Mm-hmm. Does it help the buyers now? In some cases, yes, right? Because it helps reduce that monthly payment to make it a little bit more manageable. But in the long run, if you're trying to look at the full picture of short-term, long-term, it does not do justice to them to go on a 50-year mortgage.
Who's going to keep a 50? 30-year itself, we're thinking it's a long, why even talk about 50-year mortgage right now, you know?
Well, but as a buyer, when you buy a house, not many people see the loan at 30 years. No, because they're usually going to move out and they're going to refinance. Yeah. There's not that many people that live in the house for 30 years and see that loan all the way through, right? So when buyers are buying, they're not looking at that full picture. Fine, we're not talking about 50 years from now, how much interest you're going to pay. In the short term, on a 50-year mortgage, you're going to pay, interest-wise, it's not going to be as much, right? Where you're going to struggle is you're not putting that much into equity.
Exactly.
You're not building equity on a 50-year mortgage, right?
No. Do you see this happening for new construction?
I can see it happening. If as soon as it's available, I can see a lot of new construction, jumping on it and advertising it because it helps keep that monthly payment lower.
What do you think about the rates?
We don't know yet, right? There's no time. It's just been mentioned that there's a 50-year mortgage out there. There hasn't been any talks about rates. There hasn't been any talks about down payment. But if you kind of just take a look at it and you see what the trend is, right? So from a 15-year to a 30-year, the rate is higher on a 30-year, about 0.5 point to 3/4 higher. So naturally, it would make sense that is going to be the case for a 50-year because it's a higher risk for the banks to extend it out to a 50-year. That's a long time.
Right? Long time.
So If I had to guess, I would say the rate's going to be it's going to be higher than what a 30-year would be. And then also, what is the down payment going to be,
Exactly.
right? Because you're not building equity as you would at a 30-year. So then now, will the banks do 5% down, or are they going to require 10% down, right? So there's a lot of unknowns of how this is going to play out, or how is it going to work.
Yeah, because it might be different who's looking into it too, like investment. I don't know if people are going to even do that for the first year.
It is a higher risk for the banks too, right?
Exactly.
So they have to be able to cover themselves. Now, if they do a 5% down, and so I did some numbers on a $300,000 loan amount. No, at 10 years, they've only paid down 4% of that loan equity, right? So will banks do 5% down on a 50-year mortgage? Because that puts them at risk if values come down, and now the house, like it's underwater, right? And now they can't sell it to recoup their money back. So there's a lot of risk that banks are taking to do a 50-year, and that's why we don't, down payment and all that still, if it ever comes to it, all that still needs to get figured out.
I know it's in the talks right now. Do you think it will go through?
I've got mixed feelings. Do I think it will go through? Yes and no. I think the only way it's going to go through if it gets a little bit worse, if the economy and the market gets a little bit worse than what it is now.
Yeah.
To drive up some interest. Do I want it to go? It's I don't. As from a lender side and a loan officer, when I'm looking at a buyer's financial and I'm looking at everything, it screams, do not do it.
Yeah.
Because I'm not even worried about how much you're going to pay in interest after 50 years, because like I said before, majority of them are never going to see it through that 50 years. You're not building equity by having a 50-year mortgage. Now, I know people will say you can refinance. Correct. But if the values go down, or then you're still stuck, right? You might not be able to refinance 5 years from now if you're wanting to sell it and the value's at what you bought it or less. You might be underwater to be able to sell it, right? So there's a lot of risk versus reward to do a 50-year mortgage, in my opinion.
I mean, what are the rates right now?
On a 30-year fix, we're right around 6%.
Okay. Do you see them going down?
They're all top.
Third, yeah.
They're going to come down. I think we're going to probably finish off the year with what we're at right now. And then after the first quarter, they'll probably evaluate and see what we do. But I don't think they're going to go up, but we'll probably finish off the year right around where we're currently.
With this 50-year mortgage, you would think it's probably easier to rent it out if you can't really afford it, right? Why even go? Why would somebody... Because of the lower payments, you're saying? That's the only reason?
That's the only reason. It's lower payments, right? It's to help you get into a house with the lower payments, right? And then be able to manage your monthly expense with that lower payment. But when we say lower payment, what is lower
exactly?
Payment, right? So
it's not much.
Yeah. So I did some calculation. This is on a $300,000 house, right? Now, this is assuming interest rate is 6% for 30 years and 50 years. At 30 years, just principal and interest, your monthly payment is $1,579. On a 50-year, on a 30-year, it's $1,798. On a 50-year, it's $1,597. That's $200, right?
Yeah.
But that's assuming the rate's going to be the same at 30 years. Now, like I said before, it's about a half to a 3/4 difference. So from a 15-year to a 30-year. So if we do the same for 30 to 50, at a half a percent higher rate, your monthly payment on a 50-year is $1,691. That's only $107 more.
Only $107 more.
Only $107 on a $300,000 loan with a 0.5% higher than a 30-year. On a 50-year, it's only $107 more. On a 3/4 higher, so if you're at 6% on a 30-year, 6.75 on a 50-year, you're only $51 less than a 30-year on a 50.
Yeah.
So
watch less. What do you play for? Netflix and Hulu and all that. Cut that off.
And so then if you want, then we talk about, well, what is the total interest paid? Now let's just compare it with 6% on across the boards, 30-year and 50-year. If you were to see this loan out of 30 years at a 6%, you're paying $347,500 in interest.
Yeah.
If you get it out of 50-year mortgage at a 6% and you see it all the way through, you're paying $647,500. So it's almost double
Wow.
of what you paid on a 50-year mortgage, up to the last payment that you would on a 30-year. So
Wow. Okay. I know we talked a little bit about that, but we're getting into more of the risks and the benefits. Because it's specific, I'm going to, just say, what are the main benefits besides main benefit is the lower payment that you talked about.
correct.
Anything else that you see?
I think with investment property, right? Investors who do rentals, I can see that being a little bit, keeping the monthly payments lower for them to be able to at least break even. All right, but usually investors will hold on to it for a little bit longer than your normal primary resident will. So I can see it benefiting them a little bit. And then obviously with the lower monthly payment to help manage.
Yeah, that was the next question, was who is the ideal candidate for 50-year mortgage? First-time home buyer investor or move-up buyers, right?
I would say investors.
Yeah.
I struggle to put somebody at a 50-year mortgage because I am looking at the whole picture, right? I'm looking at everything. At that point, I would just sit down with the buyer, understand their finances, understand where we can save, what we can do, right? Ultimately, I'd rather them get a 30-year.
Yeah.
If 50 years out there and that's the only way we can go, great. I'd rather them have a house than rent.
Exactly.
At the end of the day, if 50 years, only thing that they can get approved on a 50-year term, great. At least they have a house that they can call their own and not have to rent.
Yeah.
Right. But that is something that I would love to sit down and see if we can help them get to that 30-year. But because, like I said, like we just did the numbers, it's not that big of a difference on a $300,000 loan amount. The monthly payment is not that much of a difference to for it to make sense.
Yeah. I mean, you're saying starting it out and then kind of rethinking about it afterwards.
Yeah, I mean, you can always refinance, right?
Refinance.
You can always refinance after a couple of years, maybe into a 30. If everything that all the research,
and then you keep paying more. I guess.
You can, yeah. You can always pay more, regardless if you're at a 15, 30, or 50-year mortgage. You can always pay more into principal.
But then it's still a lot that you're putting into a 50-year.
Correct. So then that paying more to be the purpose of try to keep the monthly payments lower.
So if someone plans to sell or refinance in 5 to 10 years, does this loan unit still make sense?
Yes, depending on down payment, right? Again, is how much are they going to put down, what the values are going to do. So there's a lot of unknowns to make that risk a little bit more, right?
I mean, why would you have somebody pay down a lot more? I mean, I guess you can if they're, for a 50-year.
Yeah, I mean, so that's why can they refinance in 5 years? Yes, they can, but there's a lot of factors that are out of our control that could come in play from now to 5 years before they can refinance, right?
Yeah. Now, in the housing market, as we're looking at a bigger picture, how do you think it might affect the housing market in Texas and other high demand areas?
So this is where the 50-year might help on a bigger price point, right? Because then buyers that need a little bit bigger house and it costs a little bit more, they can increase that sales price by a little bit because the monthly payment's going to be a little bit lower to help them manage that, right? So you can see a little bit of that extra buying powers for buyers at that 50-year mortgage than at the 30 years because of that keeping that monthly payment a little bit lower.
Okay. And then let's say if the buyers, guiding the buyers, let's say if this ever comes into the world of, we're, having that optional 50-year mortgage, what questions should the buyers ask their lender before, considering a 50-year loan?
Just get all the information. Understand what the rate is, what the down payment, right? So those are two factors we don't know. What is the minimum requirement for the down payment, and what is the rate? Also, when you're looking at a 50-year. Also look at the 30-year. Like get both information. Look at both numbers on paper, so you can help make that decision of, hey, 30-year is doable or not, right? So when you see numbers on paper, it makes a little bit more sense, right? So I would always recommend get all the information on a 50-year, get all the information on a 30-year, and see which one it makes sense, right? Which one you get to. At the end of the day, if it's the 50 years the only way we can go, that's a better option than renting.
Yeah.
But get all the information, look at all the numbers, and make an educated guess.
That's true. What financial habits or preparation should someone have before locking in such a long-term loan?
Understanding the full monthly expense of their household, right? the monthly payment of the house is just one part of the monthly expense of the household, right? So it's being honest with yourself, understanding the full monthly household. And so that way you can be better prepared to take on a 50-year mortgage, because like we said, there's risk that goes into taking a 50-year mortgage. So then at least if those risks do show up, you're better prepared for it. You've got a plan. You've got a plan in motion just in case. But you're planning for that risk to happen. We pray it never happens. But if it does, you're prepared.
What are the few risks you're thinking?
Like, for instance, if it's a less of a down payment, then when you sell that, 5 years from now, when you're selling the house, you might not have enough equity to clear after all the fees and everything that it's going to go into selling a house. You might not have enough equity to clear, where then you're having to bring money out of pocket just to sell that house.
Yeah, one of the risks.
Yeah.
Okay, so what's your advice for young buyers weighing the choices between affordability now versus long term?
Young buyers I would always say, this is not your forever home.
Yeah.
Right. Understand the monthly payment. What helps you sleep at night? What payment is help you sleep at night?
Yeah.
Because, like I said, not every box has to be checked on your first home.
No.
So it's managing expectations.
Exactly. And, what's needed right now, right? Don't go overboard of stressing yourself out with the payments, because you think it's just the mortgage. There's a lot more other payments that come around when you're owning a home.
Yeah, homeowners insurance keeps going up, right? So that now insurance it's just not it's just insurance. It is almost a car payment.
It's almost a car payment, yes, with the utilities, that maintenance of a house that you have to keep doing. So it adds up.
Yep.
But I'm still trying to understand, what's up with this 50-year, where, you've said a lot. I mean, anything else you want to add to this?
It's, like I said, right now it's just, it's just what if, right?
What if?
Yeah, what if it happens? It.
When did you hear it first?
So there was no mention of 50 years until President Trump said it.
Yeah.
There were mention of 40 years about a year ago. That got floated around. 50-year only came into the picture when President Trump said 50 years. And that was the first time I heard about it.
Okay. We don't know what's going to happen. We don't know when this is going to happen or what's going to happen with it.
I mean, right now it's still all up in the air. So we don't know if it's going to happen. A 50-year mortgage is going to be a thing, and then if it is, then I'm pretty sure over time it'll be normal.
Yeah, like
but how
15, 30, and a 50.
Going from 50 to a 30, people were probably in arms. Now 30 years is the norm, right? And not many people do 15, 30 years. Yes, the majority of the book of business, but it's going to take a little bit to get adjusted to. And if it happens 10 years from now, 50-year might be the new 30-year, and we're not even
Oh gosh, I don't want to see that. But
yeah, I don't either. But we'll see how it plays out.
Yeah. Anyways, okay, let's go through our last rapid fire questions. Fixed or adjustable rate? Which do you think personally? What do you personally prefer?
Fix, if it makes sense. Like, fix is the way to go.
Fixed is the way to go. Why is that?
There's that much of a difference right now in this market, the rate wise, from a fixed to on a conventional loan, from a fixed to a ARM. On jumbo, you can still see that difference, but on a conventional loan, it's almost identical. Then why take that risk of doing an ARM?
Perfect. Biggest mortgage myth buyers believe?
You have to put some sort of down payment. There's we've programs that now require you to put 0% down.
That's awesome. That'll be another podcast to talk about.
Yeah, we can 0% down, no MI.
First time buyer's biggest mistake.
Wanting to get everything at once. Wanting to make sure they've got the perfect house. Right.
Guys, there's no such thing as perfect. If you build your own dream house, you'll find flaws, right?
Yeah, like I said, the first time home buyers, this is not your forever home. It's
forever homes, yes, will also eventually you'll kind of get bored of. It's changes that people. Anyhow, if you could give one golden tip about borrowing smart, what would it be?
Understand the numbers, understand the monthly payments, not just for the mortgage, but overall monthly.
Educated on.
Overall.
Yeah, so if you're trying to buy a house, a first-time home buyer, make sure you're sitting with the agent, the lender, figuring out
How
what,
do you recommend sitting with the lender
yeah,
and understanding all the numbers?
exactly.
And so that
Before you get into it and you're like, wow, I can't afford this.
yeah, you don't, that's what you don't want to do is, can you afford it on paper? Yes. But then it starts adding up, right?
Yeah.
It starts adding up. Then a year from now, we don't want you to feel that burden of, oh my God, I shouldn't have bought it at that price point, right? And so it's always good to sit down with the lender to help you understand all the numbers, see what's your comfort zone, and then kind of go from there.
Perfect. Well, I really appreciate you talking about the 50-year mortgage. We don't know what's going to happen, but guys, comment below if you guys think this is going to go taking place. What do you think? If you have any questions for Jatin about the 50-year,
feel free to reach
mortgage. Yeah, comment below and we'll get those answered. I just want to say thank you again for coming on. And if you guys want to have a specific topic about any kind of lending, comment below and then we'll probably get that.
We'll do another podcast.
Yeah, another podcast.
Hopefully in the next podcast is when we're 50 years to the
God.
We're doing 50-year mortgage.
Did it get approved? You'll find out in the next one.
Yes, you will.
Oh, thank you, Jatin.
Thank you.
Okay. There you guys have it. The most topic talked about right now, 50-year mortgage. I hope you guys learned a little bit as a buyer. Is it good for you or is it not good for you? But stay tuned and make sure you subscribe to the channel so that way we can inform you, will it get approved or not? Well, I just want to say thanks for watching and I will see you next time.